Hi, good people. This is CPA Namusonge, manager at Elentic LLP, and also the senior tax advisor at Elentic LLP. Today, I'm happy to discuss the causes of tax audits for firms or for taxpayers. Tax audits, I can say they are not something like they should always, it's not a bad thing. It's just a normal thing by the tax authorities, and they are mainly used to check the compliance, to check if the assessment are in line of what you had submitted for a tax return. But there are other causes that may trigger them to do a tax audit for your firm. For me, there are 9 points which may cause a tax audit for a given firm or a given taxpayer. And I'm happy to discuss the causes of a tax audit. On the first point is what we call the inconsistent returns for a given taxpayer. If you do an erratic or inconsistent tax return, or you submit an inconsistent tax return, this is a trigger to a tax audit. On the point number 2, we have filing a tax return without making any payment. The next point is failure to register for a VAT obligation. When you have reached the threshold, your sales or your sales for a given year have surpassed the 5 million threshold, but you have not registered. That will trigger a tax audit. On the next point, point number 4, is the incomplete records. When I say incomplete records, I mean like the taxpayer is not able to support his accounts or his financial reportings. That will automatically lead to a tax audit. On the next point, point number 5, is the presence of capital allowances and more so the investment deductions claims by the taxpayer. The next point, that is point number 6, is concealing a sale of good as a sale of capital items. Here is where a taxpayer reports a sale of good, but he does an entry as a sale of a capital item. The next point, that is point number 7, is a taxpayer's profit margins being outside or not being inconsistent with the environment or the market in which the taxpayer is operating. Next point, point number 8, is high level of related party transaction locally or internationally, which causes thin capitalization for a given business or a given taxpayer. The next point, the last point, point number 9, that will cause you a tax audit, is what we call intentional tax evasion schemes. This is where the taxpayer does or enters into activities that he will not disclose all his financial transaction with the main aim of evading tax. Yeah, for today, I think that's all on the causes of tax audits. Until we meet next time, thank you for your time and have a blessed time.